What drove these record inflows, and do you expect them to continue at the beginning of this year?
Hi, good morning. Yes, we closed 2020 in Q4 with a very strong finish after what was a very unique year, of course, in 2020, but closing with 30 billion of net new assets across almost all of our asset classes, which was a really strong result. The fourth quarter in particular was really embedding that outcome with 13.6 billion of inflows. We've seen that growing throughout quarter on quarter last year, obviously Q1 last year being quite unique, and the drivers, passive and ETFs, are particularly strong. We very much cement our number 2 position in Europe there, and there's very strong input in our inflows of almost 17 billion. Cash was particularly strong last year. As we know, there was a flight for cash by investors, but we demonstrated that we could offer those solutions to our clients, and we do see, asset reallocation across the full suite. And alternatives also had a very strong finish in Q4. Do we expect that to continue? Well, as we now come to the conclusion of the targets that we set at the point of IPO, which was 3 years ago now, we've achieved those targets at the end of 2020, including our net new asset target of 3 to 5%. And looking forward, as we move into the next phase of our corporate journey, we're looking to stretch that target to have a net flow target of greater than 4% on average. So how are we starting at the start of this year? We are seeing a very constructive start to 2021. Of course, we accept that there will be and can be volatility, but a constructive start so far.
Okay, and so good morning, Claire. You talked about the inflows, you've talked about how a lot of that's going into passive and ETFs, and you're second in Europe on that front. But the number 1 player, of course, is a long way ahead. How do you plan to close that gap? How do you plan to do more in ETFs?
Our plan for ETF is to very much cement our position that we have in Europe, and we manage that through product innovation and also through thematics. So a very strong theme, of course, for 2020 was ESG, always a mega trend, but something that's very much been driven forward as a catalyst from the activities during last year. And we feel that we are positioned very, very strongly there. We saw, in fact, of our inflows into ETFs last year, a third of that was coming from ESG ETFs, and we continue to innovate and launch new products on that front to meet client demand.
When I think of, rightly or wrongly so, innovation and new products, I have to chuckle about Reddit a little bit. It's not just Reddit, obviously. There is a whole new generation investing in a potentially dangerous way. What are your thoughts on the gamification of the markets that we've seen over the past couple of weeks?
Well, it's been interesting to observe, the activities that have been going on that front. But I think if I look internally, we're very much focused on, our expertise and the solutions that we can offer for our clients. And I think it's important that we maintain all of those relationships across our strategic partners, both through institutional channels, through retail channels, through distribution channels, through sovereigns, etc. We have many channels that we operate through to offer the suite of solutions that we can to our clients.
We've seen some regulatory changes in China, Claire, that perhaps make it more or make it easier for Western businesses to do more business there. Are you going to try and take advantage of that? Are you looking to do some M&A in that space?
We're certainly looking very closely at opportunities in China and in Asia Pacific more broadly that we can use to accelerate our growth in that area. We have been successful so far through leveraging strategic partnerships, and we think strategic partnerships is the right model for us, whether that be in China or in other locations. So that's certainly something we will be looking at very, very closely, given the regulatory changes in China specifically.
We've noticed a little bit of a wobble in Chinese activity of late, and I wonder if you remain confident the country can continue to fuel the global recovery.
Well, I think last year, at the end of last year, we obviously saw a very strong finish in the markets, and we've seen that continue in the early part of this year. So let's hope that we do have a path to recovery and out of this pandemic situation. I think we're all very hopeful that that is the case, and I think China and Asia kind of leads in terms of experiencing what that market activity could look like. But we don't just focus on the things that we can't control, which is the markets. We have to focus on what we can control, of course, which is our cost base, our product innovation, our solutions, how we manage our strategic relationships. So what we can't control, we look very closely at, but we focus on what we can control. And I think that has been a recipe for our success looking back to 2020, enabling us to achieve against all of our financial targets that we set for ourselves, including achieving a record profitability and a below 65% cost income ratio.